record. So if you're going to join me live, welcome, welcome. If you're going to look at one of the replays, then welcome. It's March 17th. It's not tax season, but yet it's still, I'm going to read it, Kathy, there we go. It's still that time of year where we have to start thinking about money and getting ready for that money time. And it's never too late to get organized. And so if you want to click the link and join me live, that's absolutely okay. If you want to kind of just watch and post questions, that's okay too. That either way works for me. I'm not able to see the live, so probably only going to be able to answer your questions if you are actually clicking the Zoom and joining live. So I'm got us on record and I'm gonna just go for it here. So what do you need to do to get ready for tax season? Well, the first thing to understand is if you're in the Step It Up group, I'm so glad you're here. I hope you're diving in a little bit deeper. You got to separate your business from your personal account. Now, if you were just watching me on the Thursday 30, the example I gave was, say, somebody new who's using Venmo or something, which, by the way, don't use Venmo because it's not HIPAA compliant. If you take the client payment and then decide to go, let's say, buy gas or go get groceries, or you're going to pay your dog walker, you have just commingled your business and your personal expenses. This is a very rookie mistake. It's okay. We've all made these mistakes before, but at the end of the year, it makes for what we call in the military a Charlie Foxtrot, because you're having to go through each of these little expenses and incomes and expenses and incomes and ask yourself, wait, was that for my business? Wait, did I buy groceries or was I buying candy for my candy dishes out in my lobby? So your best bet, your best thing to do is to organize your business so that you can create a separate bank account. I prefer to use a separate bank just because I like to shop around and get really good deals on my banking and my personal, it's just a little, it's different the way we do our personal banking. But this is the beauty, right? At the end of the year, you take your separate bank account and you literally just hit print, or you go into your QuickBooks and you hit that button that says sync your bank account, and bam, everything is in your account. It's ready to go to the tax preparer. Now, QuickBooks is my favorite because you can create rules. So if let's say I am buying paper for my copy machine every month, well, eventually QuickBooks will learn that that's an expense and it will categorize that for me after the first couple of entries. So now actually for me, all I have to do is hit reconcile and it zeroes out. Like it takes me zero time to reconcile my bank balance. Don't ask me about reconciling on this because if you're not reconciling your bank account every month, that's another Charlie Foxtrot at the end of the year, right? So all of that together, you have to have some kind of accounting. I know some folks use different things to have their expenses gathered and categorized. Just remember, if you're using identifying information, PHI, or sensitive information, anything that could identify your clients, you have to de-identify it in some way or use a HIPAA compliant accounting software. So HIPAA compliant software or de-identified client data in a separate bank account. Now, how you choose to do that, if you want to create a PLLC, an LLC, a DBA, or you just want to go buy your domain name, honestly, it's up to you. A lot of banks don't require a whole lot of information for you to open up a checking account just for your business. So let's take a look at some of the things that you would need to categorize. And I'm going to get out of this and this and this, and I'm going to open. There we go. So if you're watching in the Thursday 30, you saw this, and this is a sample break-even analysis that I use a lot. And these are not real numbers, because you can see I'm basically saying, well, this is an imaginary business that started in January. And if you, let me zero this out real quick. Boom. So you can see it's very heavy on expenses. And if you look at this pink ribbon, this is going to track all of the expenses for each month. So this would be you looking on your past year, right? And so the way it works, if you look, let's say in April, or it's March, let's say it's March, and I decided to buy a new computer. I want you to watch this box right here, this pink box. If I buy a $3,000 Mac, oof, been a good year, right? So did you see that number jump up? Now I know that that's an expense, right? That goes in. Now there are other things that have to happen with that piece of equipment, because if it's over a certain amount, or if it's used for a certain purpose, like office furniture or a vehicle, then you get to do some other fun things with it. But that's for your accountant and you to determine. What we're doing here is just finding a way to get organized. So if you're an Excel person, awesome. This is for you. If you're a QuickBooks person, great. Go in there, download your bank account data, go in and categorize it as a business expense. There should be no other type of expense in your business other than a business expense. So for example, if you are like me and you had a shiny object a few years ago and you made t-shirts, right? For your counseling practice, because everybody wants to wear a t-shirt saying where they go to counseling, right? Whew, I've had some bad ideas, y'all. Or better idea, if you wrote a book, let's say you wrote a book, right? And so you went to upwork.com or fiverr.com and you had somebody design your cover, or you had a business coach like I did. All of those things came out as expenses. So if you're tracking this in an Excel spreadsheet, awesome. You can see we've got categories over here, and I could say, I think I have a spot for coaching. Yeah, right there. Because actually I have a business coach right now. So every month, that's where my coaching money goes. If I was, instead of a networking group, let's say I was going to write a book, right? Then I'm going to, first of all, get rid of that. And so every month it might have an expense. Designing a cover might cost me $100 this month. Going and paying an editor might cost me $800 this month. And depending on how you do this, again, if you're looking at this and you're an Excel person, you can add rows so that you can have other expenses, because obviously things change, right? So I've done another video on how to track how many clients you should have, how you should pay yourself. And so go back and look at that if you're curious about these other numbers down here. How many clients do you need? In fact, I think I just did it a couple of weeks ago. If so, we're uploading that transcript and we're getting that recording up for you. You can also go to YouTube, Kate Walker Counselor, and you can see those videos there. I love this graphic, so you'll see it a lot. Let's talk about if you're a business owner. If you're a business owner, it's going to be, I'm going to stop the share because I never know if Zoom likes me to change screens. And I'm just going to show you this really quickly. I'm not going to make a huge deal about it because, again, this is something that it affects a few of us. If you're hiring, if you're doing folks, if you're hiring folks as 1099 independent contractors, if you're hiring folks as W-2, you must know the difference. And there are different times when you must file. So for me, I hire 1099 contractors to do my virtual assistant work. So even my daughter Ridgely, she's a 1099. At the end of January, I must submit the red copy of the 1099 form. At the end of February, I must submit the final form to the IRS, as well as another form that tracks how many 1099 employees I have or independent contractors I have. So if that's another piece of your business and you're hiring virtual assistants or you're hiring other therapists, keep in mind that there is extra tracking involved. If you are a W-2 employer, I cannot emphasize enough. Please hire a payroll company to track that for you. There's nothing worse than having to pay back taxes because you didn't take enough out. So that's what you pay a payroll company for. They take a portion of what you pay your employees. It's to make sure that they take the hit and keep things organized for you if they get it wrong. 1099, you can do it yourself, but QuickBooks has a way, and I'm sure other companies do as well, for you to track those with a simple checkbox. When you have an expense, it will ask, is this a 1099 qualified person? You click the box, and at the end of the year, it helps you prepare all of those forms so you can stay nice and organized. All right, I'm going to stop the share. Let's look. We've gone through number one, most important, separate those accounts. Do not buy groceries from your business account unless you're buying those groceries for a staff meeting that you plan to host at your business for business purposes, right? And you can go through what is a business expense on Google to help you understand what a business expense is. Remember, when you formed your company, your practice, you designated it as a thing, right? A type of business. And so if you're all of a sudden tracking, oh, I don't know, backyard chickens or something like that. I know Dr. Salmonson has a backyard chicken farm. It's super cool. But if you wanted to start writing that off as a business expense, you would have to show somehow that that all works together, right? So just remember, there is a way to track business expenses. There's a way that the government looks at what is a business expense and what is not. And I can't tell you that. You gotta get a tax person for that. All right, so the next thing let's talk about is profit and tax brackets. Profit and tax brackets. So paying taxes isn't inevitable, as much as the saying says that it is, right? So when you are thinking about death and taxes, one of the things to remember, these are two different numbers, right? The expenses box, this red box, that's your rent, office supplies, furniture, license, malpractice insurance, et cetera, et cetera. Your income, anything that you earn. So if you have a side gig and you're putting on courses, if you're giving speeches, if you have online products. So it's ideal when this green box is bigger than the red box. Okay, that's wonderful. That means you had a good year. That means that you're making a profit. You're doing all the things in your practice and your community are thriving. So what is profit though? If you are earning exactly the same as you're expending, right? We call that breaking even. The government's not going to tax you if you're breaking even. It only taxes you on the profit, right? So if you have zero profit, you're good, right? There are no tax. Well, you're not good. You need to earn a profit. You need to make some money. But the government's going to look at that as, well, you didn't make a profit, or you didn't make enough of a profit. And so when we go and we look at our tax brackets, and all I did here was I Googled tax brackets for 2021. You can see that if you earned $0 to $9,950, your tax rate is 10%. So zero profit to $10,000, that's less than $1,000 a month. Your tax rate is 10%. So yeah, you have to pay a little bit of taxes. Over that though, you see how incrementally your taxes grow, right? And so for a independent, or actually if I'm talking to you, LPC associates and LMFT associates, not independent and yet self-employed practice owner, you have to be sure you understand that this is what the government will look at the end. The government, like it's some mysterious thing that's going to look at your stuff. No, you're going to have to turn stuff in, use a tax professional, et cetera, et cetera. But they're going to look at this gray part here. So the profit that you earn, anything over your break even. How do you determine the break even? Well, you made your cool spreadsheet, you went to QuickBooks, you did all of that. So now you know if your business is in the gray. Now, how do you determine what your profit is, or exactly, I'm sorry, what your tax bracket is? And this is right from my book, My Next Steps, Create a Counseling Career You'll Love. It's on the chapter on money. And when you find your tax bracket, you'll see that it's incremental. So if you are in bracket number 1, that's 0 to 9,275, I think this, oh yeah, this is from 2017. It's 10%. So easy peasy, you figure out 10% of that number between 0 and 9,275. But if you're filing as a single, and this is just as a single tax filer, then you have to look, oh crap, like I made $36,000 last year. Yay me. Well, I must owe 15% of my income. No, it doesn't work like that. You pay 10% on the first 9,275, right? And then the difference, so let's say you made 36,000, that difference, that is what you will pay the 15% on. If you made $90,000, you pay 10,000 on the first 9,275. You pay 15% on the difference between that and 37,650, and you pay 25% on the difference between the next two numbers. Again, not a tax professional, and I'm not a mathematician either. So be sure that you get with your tax professional because the laws may have changed. In fact, last year they changed significantly. So be sure you understand what the rules are now, long and short. If you made approximately $90,000 last year, you should have been pulling out around 20% of everything you made to prepare yourself for April 15th. Now, during Snowpocalypse last year, we got an extension, which was awesome. I think we were extended to June 15th. But if you choose to file an extension like I do, I file an extension, I'm always paying in October. If I owe money on my taxes, what happens is even though I've got the extension, what I owe still accrues interest. And that's not in my favor kind of interest. Right? This is in the government's favor kind of interest. So at the end of the year, if your tax person looks at you and says, oh my gosh, great year, that'll be $10,000 to send to the government right away. Good job, you. And you're like, I need an extension. That $10,000 is going to accrue interest. So in June, it's going to be $10,100. In July, it's going to be $10,350. And don't check my math on that. Long and short, though, it's going to grow in what you owe until you pay it. Okay, so this is the lesson, right? So you go this year and you think, oh gosh, okay, this put me in about the 22% tax bracket. I've got to file an extension. I'm going to set up a third account, right? This is my savings account for taxes. I will pay off what I owe, and I'm going to start something new. I'm going to start paying quarterly. So I'm going to pay my $10,000. Then I'm going to ask my tax professional to set me up with quarterly tax payments. What that means is April 15th, I owe a quarterly. June 16th, I owe a quarterly. August 17th, I owe a quarterly. I'm going to be paying my taxes in advance based on what I was taxed this year. Is it perfect? No. If you have another awesome year, which you will because you're awesome, you may still owe when the following April rolls around, but it won't hit you like it did the year before because you were paying in advance. You were getting those quarterlies taken care of. Now you still have to pay those quarterlies on time, but if you're paying in advance, it's not going to hurt as bad. It's not going to hurt your heart as bad or your pocketbook. Now, finally, that third bank account, right? You've got your personal account, you've got your business account to track your expenses. That third bank account where you're going to start paying ahead for your taxes, I want you to include something else in that bucket. I want you to include your retirement, right? Something called a SEP, S-E-P as in Paul, IRA. It's a special IRA for business owners, and there's a maximum amount you can put in that. I think it's $58,000 this year, and there's a minimum amount that you can put in it. But here's the thing, you can't fund that, right, if you've already paid your taxes, right? Because here's the beauty. All right, so let's say you're like, I want to pay my taxes. I've got to get it in on time. April 16th, I pay my taxes. And, oh, I want to fund a SEP. Well, if you had paid the SEP first, it actually would have reduced your income. You would have owed less taxes. So pay yourself the SEP, pay yourself first, fund that SEP. Ask your tax professional when they do your taxes, they'll come back and say, well, you made this much money, and do you plan on funding your SEP? And you say, yes, I am. Yes, I do. Yes, I do. He'll tell you, or she'll tell you exactly how much you qualify to put in that SEP account, right? Because as I said, there is a minimum and a maximum amount. And once they give you that number, you file that extension and you fund that SEP account, pay it. And this is with a separate professional. Contact your qualified financial planner, and they'll help you with this. Fund the SEP, pay that SEP, get it going, and then pay your taxes. Now, I know not everyone can do that. I know that it's something that you may not be able to do right away. Maybe you want to plan on doing that next year, but for everything that is wonderful, please set up that third account, because we've talked about it. The working years above ground, your disabled years above ground, those things where you're going to require a little extra care and you may not have that income coming in. Even if you have a committed partnership and you're counting on that partner to help you out, if you haven't had the money talk yet, and you're not sure exactly how much is going to come in from that retirement, you've got to start funding that SEP IRA. It can only help, right? It can't hurt. And so pay yourself first. Let's review. We've got 3 things. Number 1, separate that money, because you've got to get organized. How often do you add to the SEP? I fund it once a year, but I pay into it in that third bucket, that third bank account. I put money into that account every single month. So that's a great question, Kathy. So bucket number 1 is what I have to pay myself to keep my lights on, or, buy groceries or pay my car payment. That's bucket 1. That gets funded first. What gets funded second is this taxes/SEP IRA. And so I've told y'all before, I take about 20% of what I make, and that's how I calculate what my SEP/tax obligation. Now, this is only guesswork because I'm trying to guess for the upcoming year, right? But I'm basing it on the previous year's numbers. So bucket number 2, every single month, I put in about 20% of what I make. And then bucket 3, which God bless bucket 3. If there's money left over, it's going toward any debt, student loans that I have. If I have a business credit card outstanding balance, it goes there. And those are all expenses, but they've already happened, right? So that's actually your payment on those credit cards and all that stuff. That's actually, you're paying on a debt that's already happened. So we can talk about that too. But some folks, and that's actually something I didn't really talk about, if you are disciplined enough, and some folks in our 30-day practice challenge, Money Edition and Badass Businesses, Texas Counselors Creating Badass Businesses, have given their credit card stories where if you're really disciplined and you love those travel points or that cash back, a business credit card is a great way to go, because it's literally all business expenses. So it's like having that separate bank account, but you're getting the perk of getting like no interest, or maybe you get points toward a fabulous vacation or something like that. So you're getting a bonus while you're keeping your business organized. So separating your business can also look like a business credit card if you're well disciplined. If you're not well disciplined, just do the bank thing, right? And then track your expenses. If you're a spreadsheet person, go for it. Get an Excel spreadsheet. I did that for years until I figured out QuickBooks. If you use something like QuickBooks, just be sure to de-identify your clients, or buy something that's HIPAA compliant so that it can protect that client information if that's what you're going to be storing there, right? And then finally, you need to be able to tell if you earned a profit, right? So that's that last document we looked at where there was the green box and the red box. If your green box is higher than your red box, right, you earned a profit. Then you can Google tax bracket to see where you fall. Now, here's the caveat. If you are in a committed partnership and you plan to file jointly, this may go toward your household profit. So some of our business entities like an LLC or a PLLC is actually considered something we call a disregarded entity, which means the profit just kind of gets rolled into the whole household income. And even though maybe you didn't really earn a huge profit, it was only like, let's say $8,000, and you're like, yay, I'm only in the 10% tax bracket. But then you realize it just bumped your household income into the 30% tax bracket. You might want to talk to a tax professional about how to organize your business so that it doesn't have such an impact on your house. Or you could be tracking your business expenses wrong, or you're just a badass and you're making a huge amount of profit and you kick ass at what you do and you're a benefit to your community and you are just a whiz at doing business. Profit is good. Profit is a good thing. Profit allows us to take sick days, and it allows us to put our kids through college, put us through college. It allows us to get our car fixed, buy a new car, right? So please understand profit is good. Figuring out how to stay organized though, so that when you hand all this stuff off to the tax professional, they don't charge you buku bucks because they're having to go in and fix everything, or they're having to go in and organize everything. I remember telling my tax professional, what if I just brought you a shoebox full of receipts? He said, first I would give it back to you, but if you insisted, I would pay you for every second it took me to go through those receipts. And I promise you I would take my time. So that's how that goes. So this has been all about preparing yourself for tax season. If you're watching this on the replay, I'm so glad you're here watching. This is March 17th, 2022. Please be sure you're not getting old information. If you're watching this 2 years from now, go watch an updated video. This is for this year. So if you have questions, post it in the thread. If you tag me, I will get to you. Thank you, Kathy, for joining. And I will see you guys at our next training, and look for the replay of this, the recording, plus a written transcript in your Step It Up book, not book, Step It Up community in the #1 Start Here course, right? The very first part of your module. When you click that, you will see every recording, every training, every transcript that we do. So thanks for watching, and I will see you guys soon.